Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson, we continued our free futures trading course with a look at how trading on margin in the futures market works. In today's lesson, we're going to wrap up our module on the logistics of futures trading with a look at transaction costs. So let's get started.
When trading futures, there are four primary transaction costs that traders need to be aware of, which are spread, slippage, commissions, and exchange fees. First, let's take a look at the spread. Like when trading any other financial market, when trading futures, you pay the spread, which is the difference between the rate where you can buy and the rate where you can sell. Also, as with any other financial instrument, spreads in the futures market vary from contract to contract depending on the liquidity in the market. Generally, the more liquidity, meaning buyers and sellers, there are in a particular market, the narrower the spread. One of the reasons why most traders stick to electronically traded futures like the E-mini S&P is because there is normally a large amount of liquidity in the market during active market hours in these markets, which keeps spreads down around one tick. As we've discussed in previous lessons, a one tick move in the E-mini S&P is 0.25 points, which equals $12.50 per contract. Next in line is something which is known as slippage. Slippage is basically the difference between the rate where you place your order and the rate where your order is eventually filled. Again here, slippage is generally a function of volatility and liquidity in the market, meaning that the more volatile the market is and or the less liquid a market is, the more likely you are to experience slippage. This is also another reason why active electronic markets, and specifically the E-mini S&P, are so popular, because of the huge amount of liquidity that is available during active market hours and relatively small amount of slippage that is experienced as a result. An important thing to keep in mind here is that because slippage is a function of how much liquidity there is in the market, trade size is also a factor here, meaning the larger the trade size, the more slippage that can be expected. Next in line are commissions, which are the fees the brokerage firm charges per contract traded to execute your trades. Commissions vary widely from firm to firm depending on the level of service and other amenities that you receive, and can also vary from contract to contract. One of the reasons why I've chosen to recommend Apex Futures is because they offer some of the lowest commissions for electronic markets in the industry, and the level of service has, from my experience, also been top-notch. Commissions for trading electronic markets like the E-mini S&P are $1.99 per side, meaning $1.99 to buy and $1.99 to sell. When trading any market, it is important to understand whether a quoted commission rate is per side or what is referred to as round trip, which means the rate for both the buy and the sell combined. A $1.99 per side commission is equal to a $3.98 round turn commission, which from my experience is among the lowest in the industry. The low commission rates available are also another advantage of trading futures over stocks, as the more competitive discount stockbrokers generally charge somewhere in the neighborhood of $5 per side commissions. The last transaction cost that we need to discuss is exchange fees, which are a cost traders pay in addition to commissions in order to execute their futures trades. Like the name indicates, exchange fees are charged by the exchange, so unlike commissions, they are the same no matter what firm you trade with. The exchange fees vary depending on the contract that you are trading, but for the E-mini S&P are currently $2.28 a round turn. I've included a link below this video which shows the exchange fees for the other electronically traded instruments. That's our lesson for today. In our next lesson, we'll begin a new module on the fundamentals of futures trading, so I hope to see you then. As always, if there's any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.